What's up, everyone? All right, well, today is a Red Day recap. Man, this week has been a drag. So, I already left the office. I was like, you know what? I don't even want to look at my computer for at least until the market's closed. So I've got my skis in the back. We've got fresh snow, and I am gonna go enjoy the rest of the day. But, of course, I've got to give you my recap for the day. So, today, let's see, first trade of the day. Well, before I get into the details of the trades, maybe I'll just cover high level that we are still dealing with these bank stocks being really volatile. And I think that they're a trap. I really don't want to trade them. I have taken a couple of trades on them, but they don't feel safe. I'm concerned about the risk of potentially seeing more regional banks go under. I hope that doesn't happen, but I certainly will not let myself be stuck holding 3,000 shares of a $30 stock while it gets halted and then we find out it's been taken over by regulators. That's how you lose $90,000. I don't need that to happen. I don't want that to happen. So my average winners aren't $90,000 right now, so I don't want to put myself in a position where I could have that kind of loss. And that means that regardless of how much opportunity you may think that these bank stocks present, for me at least, and probably this is the case with other traders, the risk profile doesn't support taking a trade. So there's no trade. But here's the problem. When the most volatile... Language! Earmuffs! That's a nice thing about driving in a sturdy Swedish fish like this Volvo. It's pretty tough. The problem is we had a lot of snow recently, and anyways, just hit something, but it's fine. It's no big deal. So, sorry for the language. All right, back to what I was saying before. So the problem here is that when you have a stock that's, these bank stocks that I may not like them, but they are obvious, they're liquid, and a lot of people are trading them. What does it create? Dispersed attention, dispersed momentum, and less momentum across the board, period. And so today's one of those days where we didn't see anything that was clean. And, traders kept, just focusing on some of these big bank stocks, which I just can't trade. So if on a day where you sit down, the most obvious stock is a stock that doesn't fit within your strategy for whatever reason, maybe it's too cheap, it's too expensive, risk profile, whatever it is, doesn't matter. It doesn't fit within your strategy, but it is a stock that a lot of people are going to be trading. You have to recognize that you probably are not going to do as well as you would do on a day when a stock that fits within your strategy is also the most obvious stock that everyone is focusing on and is trading. So that is something to keep in mind. Today, my first trade was on THMO, a continuation stock. So the thing with THMO, so today I taught a class for Warrior Pro students, and that was one of the reasons I didn't have time to record a proper recap before I left. So in that class, it's a supplement to the new chapter 14, which is Ross's trading plan, the trading plan that I would follow as a beginner trader. And so in that class, I talked about, a couple things. I talked about the importance of stock selection, and I lay out my full plan. But one of the things that I said is that you have to look really closely at your metrics, because your metrics will tell you, obviously, what you're doing right and what you're doing wrong. And so I gave a little demonstration of how to read the metrics, because that's one of the challenges is you may have that data, but you don't really know how to read it. So so one of the things I like to do is be able to help students with this. And anyway, so I was showing you how I read metrics. And so I looked at a period where I was trading last month. It was a 2-week period where I didn't trade very well. I think I made a little bit of money, but I was not considerable for that amount of time. And anyways, I was like, let's see if we can find in the metrics a possible reason, a cause of why I wasn't trading so well. And if we can find that, then from the cause, we can build a solution. And one of the things that I noticed in doing that was that I was not making as much on stocks where the relative volume today was less than 25% of the relative volume on the previous day. And this is a sort of nuanced thing and maybe isn't interesting to everyone, but what that tells us, that guy got his window smashed. What that tells us is that the stock is on a continuation day, because while it's true that I wasn't making as much on stocks that were on second day continuation, I was still doing well on stocks that were 5 times higher volume than average. And a stock being 5 times higher volume than average means it's, a fresh momentum stock, but that's 5 times higher than its 50-day average. So it's going to be still 5 times higher on day 1, day 2, and day 3 versus a 50-day average. But on day 2, let's say it trades 10 million shares on day 1. On day 2, if it's trading only 5 million shares, then it's actually lower relative volume versus previous day. So anyways, from my metrics, I noticed that. Unfortunately, it was after I had already lost money on THMO, which was a continuation stock. Yesterday, THMO was weird. What was weird about it was really clean pre-market, and then the market opened and it was just like sideways. It was choppy. It wasn't clean. It wasn't easy to trade. It was really quite difficult. And so then after hours, 4 o'clock, it rips up again. Okay, then pre-market it squeezes until news comes out, secondary offering, private placement, but an offering, dilution, selling more shares. So unfortunately, this ended up being, I think, a nasty loss for some traders, because in one candle it dropped from $6.80 all the way down to $4. Now it bounced back up to over $6. I don't know how much higher it's going to go, but it highlights the risk of trading second and third days. The risk, both, number one, that the continuation days usually aren't as strong as day 1, usually, except in a really hot market. But we're not in a really hot market right now. So recently, second days haven't been as hot. And then number 2, the longer it stays at these elevated levels, the more risk you have, especially with a small cap stock, of getting that offering. And that's what ended up happening today. So anyways, THMO, I think I was down like $300 on it. I was up 400, but then went red on it. So down 300 to start the day. That was my first trade. Great. In the red. Again, same as yesterday. First trade in the red. Second trade was on LIPO. LIPO starts squeezing up. Day 1, fresh news. Okay. The problem was the spreads were big. I didn't get in when it first hit the scanners because it was trading at like 190 by 222. Then it goes up to 230, 240. Spreads get a little bit bigger. I got in around 275, I think it was. It goes up to 3. I took some profit at 3. But I only trade with small size because the spreads were big and I wasn't really sure. I made $500 on it. All right, big deal. So I'm up now 175 on the day, something like that. And then I was sitting there at 175 on the day. And then a third stock pops up and hits the scanners. And had news. I jumped in it. Again, volume was lighter, spreads were bigger. This one was a little bit of a problem because I got in when it was up only about 15%. Therefore, it was not at the top of the gap scanner. Top gappers were like 40, 50%. And so I got in there, it went just a little higher and then it reversed. And as it reversed, now it's not on the high day Momo scanner anymore. It never really got to the top of the gap scanner. and it just is a pop and fade. So I lost 1,200 on that. So I finished the day down $1,000, and that's where I kind of, I was like, man, I feel frustrated. I was red on Friday, green on Monday, break even on Tuesday, which, for me, I more or less am like, that's might as well be a red day. Break even is not green. And I think I was probably red like $50 or something after fees and commissions. And then today's another red day. And yesterday was a red day. So I'm like, man, well, at least the red days were small. That's good. But I'm starting to get a little frustrated. Okay. Feeling that emotion start to pick up. And I'm like, you know what? This is annoying. The bank stocks are moving. They're taking attention. Things are really choppy right now. You know what? Like, all right, walk away. Walk away. I already had low expectations for today. And I considered not, a part of me was like, why even trade at all until the bank stocks are kind of like, out of focus, because they're drawing too much attention, and that's diverting away from what I would typically be trading. So maybe just wait until this environment clears. But you know what I said about the 25 rule of trading? It's a rule of thumb, but it was this episode I uploaded over the weekend. Anyways, or last week. Anyways, if you saw it, hopefully you guys enjoyed it. But the long and short of it is that it's important to show up every single day, because you never know when you're going to get a stock that squeezes up like OCEA and goes from $5 to $26 or $30 a share. So I show up every day. Unfortunately, showing up and then having the willpower to not take a trade is easier said than done. And you guys know this. So, I see something popping up and may not be A quality, but it is moving, and gosh, finally something's moving. I've been sitting here all morning. You take the trade, and the next thing you know, you're in the red. So anyways, I'm glad that I was able to keep the losses small. Things are still pretty slow right now. It's a little disappointing, but of course, this is also trading, and it's not green every day. That's just not the way it works. So the fact right now is just that we're dealing with a distraction, and that's actually a good thing in a way, because it helps understand the reason why it's more difficult. When it's difficult, but you can't figure out the reason, that can be even more frustrating, because you're like, I don't know why I can't get a solid trade. But when there's something very clear that explains it, then it's just sort of an issue of, okay, can you hang tight until things improve? And that's what you really have to do, because trade the market you're in, not the market you want to be in, right? So anyways, I will be back at it tomorrow. I just have to make sure I can restrain myself if it feels tomorrow the same as it does today. I have classes I'll be teaching for students again tomorrow, so I'll show up and I'll trade in the morning if there's something that looks good, or maybe it'll be a no trade day. And I'd like to avoid having another red day, but at the same time, as long as I can keep the loss small, then it really is not. Red days are not a bad thing, and that's a really important and very difficult thing to learn and to really truly be able to believe. But like a red day today, like where I'm down $1,000, that is a success. Walking away before you hit max loss is a success. Earlier in the year, I was either having a green day or max loss. And what that was showing was that when I was red, small red, I wasn't walking away. I was continuing to fight. And that's not really a good thing. It's better if it's red, if you're going red and the writing's on the wall, to read it and step back. So anyways, that's what I did today. That's what I did yesterday. That's what I did on Tuesday. And that's what I did on Friday. So, I'm a little bummed out that I haven't had a really solid green day since last Thursday, where I was up, 10,000 or 11? I can't remember. But anyways, that was an awesome day. And days like today, just chugging along and waiting until I get that nice, nice stock that fits within my strategy, that is obvious, and that's when I'm gonna size up. All right, well, hopefully you found this interesting. I'll remind you, as always, that trading is risky and my results are not typical. There's no guarantee you'll find success. Whether you trade on your own, you'll learn from me. So make sure you're taking it slow I hope you practice in a simulator before you put real money on the line. We're certainly in a market where gaining experience is still very possible, but it's better to do it in a safe environment, because this is not the super hot market that we've traded in during other periods of time. It's cold right now. So study up, gain experience, practice. I don't know when the next bull market's going to start. Might be later this year, might be next year, I don't know. But make sure you're ready when it does start. So gain that experience with that screen time right now. This is a good time to do it. All right, I'll see you guys first thing tomorrow morning.